led from every.
I'm gonna record here.
That sounds good. Yeah. So the process of like learning from 4 to 5 years covered everything from day trading to swing trading to investing to options. So like I've had my hand on like a ton of things. But really what stuck for me was swing trading, more to the longer term side. So more like a month to like 3-month holds and some investing. But what I really loved was the technical analysis side because I'm very much of a pattern driven person. I'm very much of a math person. Again, you can also be that on the fundamental side, but I really found my passion for it and my excitement for it in technical analysis. So I did a ton of things. I did range bound trading. I did breakout trading. I did all these things. But what I found that I love the most and what works the best for me, at least, is what is known as trend following. And I'll get into this more in a bit. But basically, it's just the essence of following the trends in the market. And it's a great way, at least for me and for other traders, to actually make some money on stocks in a safer way. That's not day trading, and it's a bit faster than investing. But again, that's what I do. And so that's what I love. And yeah,
sweet. Well, I'd say go ahead, dive in. Where do you want to start with AMD?
All right. I'm allowed to share my screen, right?
Yeah.
Okay, cool. Let's do that.
If you do have issues, I believe I can unlock it on my end. There you go.
All right. Let's see. All right. So, yeah, so I just wanted to start off with like the basics. Is I don't know how much you guys know, so I'm just gonna pretend like you guys know nothing, and so I'm sorry if you do. But basically, there's an idea that I believe in, and a lot of people do. But there's also a lot of controversy around this, called the efficient market hypothesis. Have you heard of this, Sean? Yeah,
I have.
Yeah, so there's like 3 main forms of it. I believe it's weak form, semi-strong, and strong form. The one that I believe in is weak form, which basically means that all information of the company is reflected in the stock price. And so you can debate on that, but that's what I think. And so basically how I take that into my approach is that if the stock is headed up over time, then that means generally we're looking at a decent company. And so that's always where I start when I'm looking at a technical analysis perspective. Is I go out and for instance, you can go on any charting platform you want to. Right now I'm on tradingview.com, but you can do this on your broker, on Yahoo Finance, on literally any other place. You just basically zoom out to like a 5-year view and just go, okay, is it going from the bottom left-hand corner to the top right-hand corner? And if you have a stock that is doing that over like a 5-year basis, then in general, you have a decent company. And so that's my fundamental analysis for you. But that's typically where I start. And so again, the idea that we're using is trend following. And I did kind of want to hint on that a bit more. So again, there has been like, if you want to, you could totally go out and do your own research, but there's one study here that did a century study and then 2 centuries of trend following. It's all studied and whatever. And basically it works out. You typically generate roughly about the same returns as the market, a bit higher. But the cool part is your downsides are protected more. And so anyways, that's kind of the idea behind trend following, is that you're looking for the trends in the market. And I'll explain that here in a second. I just kind of wanted to prove that this isn't something that I made up.
Sure.
Anyways, so jumping into it. So this is SPY. We're going to the stock that we're researching, which is AMD. So I'm so excited. Advanced Micron Devices. So my little system that I look at is really a 4-part system, which I broke it down as just TDBS, which is trend, dip buy, breakout, and stop loss. So that's kind of how I look at it. So let's start with T first. So T is trend. So again, we're going to zoom out on like a longer term time frame here. And basically we're looking at, does it go from the bottom left-hand corner to the top right-hand corner? So that's our first assessment, that it's trending up. So we're looking for a stock that is continually going higher. A few caveats with this is we want to make sure that the stock isn't like just going straight up like a hyperbolic move. We are looking for a stock that is slowly kind of stair-stepping its way up. That's what it is known as, like a healthy trend and a healthy move up. And that's what we're looking for. So after we kind of find a healthy trending stock, a stock that is slowly moving up over time, then we start to break that down a bit more. So if it doesn't meet that criteria, where it's not going from the bottom left-hand side to the top right-hand, then that's a stock that we typically want to stay away from, because again, a stock is an asset. And so we want to put our money in an asset that's going to grow in value over time. And so if this won't grow in value for us, then there's no point putting our money in it, or at least that's what I think from my perspective. And so if it doesn't past this first trending test, then I typically don't do any more analysis on it. But anyways, of course, AMD passes. So let's take a look. And basically what I do from here on is I will typically look at the lows. So I'll look at the lows of the stock, which basically means how far the stock has gone down. So we see that it reached a low of here, we reached a low here, we reached a low here, we reached a low here. And I want to see that these lows, again, are continuously moving higher. And once I know that, then I can start to connect these lows. So you can see here that you can typically do this on an advanced platform. So if you're using TD Ameritrade, they have Thinkorswim. You can also use a free account on tradingview.com. You can also do this on other things. I think you can do on Yahoo Finance if you expand it. But basically, you're just trying to connect the bottoms of this stock to assess where our trend is. And so I'm going to try to keep this as simple as possible. But when we're looking at a stock chart, there are a few things we can look at. One is trend. The second is support, and the third is resistance. So I always start off with my trend line. So right now, here is my trend line. I connected the most recent bottoms, which you can see are all here. And this kind of just forms a trend line that's pointing up, which is good. We want to see a trend line that's pointing up. Second, we want to kind of look at our resistance levels, and resistance are just the highs that the stock has hit. So we have a resistance level at about the 122 level. And then we have a resistance level here. And we know that this is resistance because you can see it hit it like 1, 2, 3 times. And then not that this is going to play much of a factor, but we have a resistance level here as well. And so that's the second one we want to look at is resistance. And then the third we want to look at is support. And so support is going to be where the stock kind of bounced at. So we can see here that it went down and it bounced here, went down and it bounced here. So we know that we have a support level here and whatever. Anyways, don't want to get too complicated. I just want to say that this is a great way to assess where people see value in a stock. When we see a stock start to drop off or start to come down off the highs, that shows that the people who are looking at this stock and want to buy this stock do not see it as a good buy or as a good value at those levels. And so if the market is not seeing it as a good value, meaning that it's selling off and it's not worth buying that stock at that price, then we shouldn't be buying it at that level either. So anyway, support and resistance lines are just drawn to understand where price is playing into effect and where you can actually see value in the company. And so as you can see here, the stock is trending up. So if you can, ideally, you want to buy on the dip or breakout. So that's going to go into the next section. So again, the first one was trend, and the second one is dip, buy, breakout, and stop loss. So that's kind of the system. So we just assessed the trend, which is looking at how the stock is trending up over time. And we did kind of chart out some support and resistance levels with that. And then we're going to go into our two different buying alternatives. So obviously the stock is trending up, so it matches my criteria. So it's something that I want to buy, but I have to know where I should be entering this stock. And there's two different ways to enter a stock that is trending. One is by dip buying, and two is by the breakout. So I'm going to explain each one. So a dip buy is what I'm sure most of you are familiar with, where the stock is going down and then you buy it. And the same thing works in trend following, right? So we assess the trends. We know the stock is trending up. We connect the lows to identify that. But what I like about trend following is that when we buy the dip, it actually kind of shows us the best place to buy it, right? When we come down towards this line again, this is a fundamental value line. It's almost like you can relate it to the fund, like what is it? The margin of safety type deal where you have an area where the stock has reached its fundamental level point. And that's kind of how I see a trend line. This is where the fundamental value of it is in this instance, just an example. So when the stock gets down to this trend line again, and it starts to bounce off of it, that would be a perfect dip buy opportunity. Why? Because this stock is trending up over time and it's dipping down. And so it's a very great way to enter a stock that is going up over time. And then getting it at a decent price. So the first way to enter is through a dip buy like that around your trend level. The second way to enter is by entering on a breakout. So a breakout is charting our resistance levels, which is why I wanted to do this. So once again, your resistance levels are the highs that the stock has reached. You can see the stock has reached highs here, and highs here. So in this instance, let's say we didn't know that this part existed. We just had this line here. So let's say it was like that, right? Then we can see, okay, when is the best time to enter the stock? Well, you would either wait to buy on the dip or you would wait to buy on the breakout. So the breakout would be when it gets above this level and keeps going. As you can see here how it broke above, that would be a breakout level. Now, ideally, the safest place to buy a trending stock is when you buy the dip, because you have the lowest risk. You're getting in at the cheapest price, but you can also buy in on the breakouts. That's just something that I want to note. So again, we have the trend, we assess our lows, we have the dip buy, which is our best opportunity, best opportunity to buy the stock. And then third, we have our breakout opportunity. After that, because I'm more of a swing trader, I like to add a stop loss. But again, that's going to determine if you're more of an investing approach or more of a swing trading approach. So as a swing trading approach, I would set a stop loss based on how much that stock moves. So by default, you want to see about a 3%, but it really just depends on how much that stock moves, which you can determine using other types of things. But anyways, as an investor, finding the way to find a stock that is trending up and buying on the dip and holding long term is just a very great way to either enter in and buy a stock, or just finding a stock that is good. Because ideally, or at least how I view this, and Sean can again take it a different way. But I see a stock as like a way to buy something, like I said, that's going to increase in value, but you also want to make sure that most of your profit will come from capital gains, not dividends. So dividends is like the cherry on top. So I want to make sure that the stock is continuously going up over time, because that's where a bulk of my money will be made. If it also offers a dividend, then I'll consider that a cherry on top. So anyways, trend following is just the idea of assessing which direction the stock is going and finding the best way to get into it. And typically the best way to do that is through a dip buy or breakout. And that's kind of how I assess stocks from a technical perspective.
So that's it.
Yeah, that's basically it.
So in this case, let's talk about AMD real quick, a little closer. Where are you at right now if you're going to make a decision?
Yeah, so AMD at its current level, I ideally would have wanted it around like this level, but this is also a great dip buy opportunity, especially on a swing trade, because you have it where you can set your stop loss here at this support around like the $97 level, and then you can buy in here hoping to hit 120 and then hopefully break above higher, because we are trending higher. And so that would be your swing trade setup right now. From an investing perspective, if I wanted to invest in this long term, let's say I had money dedicated to put into AMD. Let's say I had like $10,000 or whatever. I would split it. I would take 5,000. I would put in 5,000 right now. And then I would wait to see if it drops down to this trend line, and I'll buy 5,000 more. Or if it broke above, then I would buy 5,000 more here. But ideally, it's just kind of like offsetting losses and stuff like that. But I really like where AMD is right now.
Got it. Okay. No, that's good to know. And just for you guys who are listening or watching the video, is I'm going to have Austin on the podcast here, I think next week. And the goal is to, I'm not going to ask a lot of questions now, but I want to deep dive into like strategy a little bit, your win to loss ratio. Why do you like doing this more than actual investing? Because, we're going to jump into AMD here, and this is a perfect stock example. Is like, let's say you don't hit at the perfect time to make a short-term gain, but we're going to talk about the long-term gains on something like this, and you can hold it, just continue holding it. So anyway, really, really like your perspective here of trading. I have taken a few just to kind of round out my knowledge with investing. I took some courses from a few people, including, you're probably familiar with Clay Trader.
Yes.
Just to understand what he's talking about and get into options a little bit, but still at the end of the day, I still found investing significantly more profitable and lucrative, especially if you get a larger dollar amount in your account. So anyway, let's jump into AMD here. So let me share my screen, and we're going to try to make time at the end of this. At least my goal is a solid 10 minutes plus for Q&A from you guys. So just bear with me here. All right. So what we're going to do is we're going to look at the 4 M's in Tykr, and this will probably be repeated information for you guys listening, but for Austin, this will be good for you to know. Is with Tykr, we always start with the of the 4 M's, and I'll just give you the rundown of those real quick. But the first M is the margin of safety. The margin of safety is the quantitative analysis. So it's everything math that we need to do with a stock is handled for us automatically by Tykr. So we don't have to do any calculus or any hard work. It's there for us. And this has been a big time saver for me, because prior to this, I was using Excel, which was okay, but it'd take me about 5 to 10 minutes to do the math part for one stock. It was a very cumbersome process. So past the numbers, we'll just run through the other 3 M's. You've got the meaning, moat, management. Meaning, we want to understand the business. Is this a business I know? Is this a business that will be around in the next 10 years. Moat is all about the competitive advantage. We'll talk about the competition a little bit. And then we'll get to the last M, which is management. Do we have a leader with good integrity and a good track record of building businesses and increasing the share price of the stocks? We're going to cover all those things here pretty efficiently. So first off, looking at AMD, I've been holding the stock for a while. And just to point some things out here, they've got a 17 out of 20 score, which is really high. The higher the score, the safer the investment. And we'll get down to, and we'll break down the numbers here in a moment. So right away, this is looking really good. We like to see a stock that has a margin of safety of over 50%. This is basic fundamentals taught by Benjamin Graham, is you want to try to buy a stock that has a margin of safety of 50% or more. And Warren Buffett, Charlie Munger, my mentor, Phil Town, have really employed this through the years. So we're pretty close. And that's why the stock is watch. If it's on sale, it's got to be 10 or higher in the score and 50% or higher. So 40% or 47% is still pretty good. And when you look at the share price, 109 versus the sticker price, and that's the sticker price today, what the real value of the stock is, 204, we still have a lot of upside potential. Now, just give you a little context here, Austin. We're all about transparency here at Tykr. So we actually, on our Tykr.com site, we do show all the calculations. So if somebody wants to really take the algorithm and go create their own version of Tykr, they can certainly do that. Of course, we hope you still stay with us and use our platform. Sure. But looking at this, the numbers are really looking good. But of course, if somebody goes to you and says, hey, you should buy AMD or any stock out there, the last thing you should do is buy that stock. The first thing you should do is ask why. So that's why down here we break things down in layman's terms, super simple, is what is the why behind this stock? So 17 out of 20, pretty good. Not too many stocks get that high, but let's break that down. So the return on invested capital, and I'll run through these really quick and why they're important. So is this company taking their profits and reinvesting in profitable initiatives? Answer is yes. Like, they're doing a great job of that with a 5 out of 6 score there. Their equity continues to grow consistently year over year. So 3 out of 3 there. EPS, one of the most important metrics in a stock, year over year. That's amazing. Their sales, their revenue growing year over year. And then their cash, same thing. This is outstanding. They're doing everything right from a fundamental standpoint. And for context here, if you guys don't already know, we look at 5 years of historical data. We look at well over 50 data points. And you can kind of see what those data points are, but we are looking at your revenue, income, EPS, free cash flow. We also look at your debt, your liability. These are all factors into the math. Of course, you can read the calculations on our site, so I won't bore you guys to death. Based on the growth rate of the stock, or I should say the EPS growth rate, is projected to have a payback time of 11 years. And really, payback time at Tykr should not be taken literally. It should be used as a comparing tool against other stocks. We like to see 10 years or less. So in this case, we've got a 0 point, which is okay. And then the margin of safety, pretty close to that 50%, but we still give it 0. So that's the why. Financials look great. If we jump here to financials, this is a great way to visually see. This kind of relates to what you're talking about on the share price, but we like to look at the important numbers like your revenue, net income. Are they trending up? And you can kind of flip between year and quarter. So looking at the years, really nice consistent growth on the revenue, net income, EPS, that's looking outstanding. Then we get to cash flow, same thing, nice increase there. They get a lot of free cash available. If I roll over here, $777 million of free cash available, and they can use that to spend on research and development, of course, advertising, marketing. They get a lot of money to play with. Assets increasing. Now with liabilities, this is a good sign here. With liabilities and debts, we actually like to see these numbers decreasing, but it is okay if they do increase a little bit. The reason is liabilities, a big component of that is your payroll. As you hire a lot of employees, you are liable to pay them. So that's a big liability. They are flat. That's great. They're increasing revenues and net income without increasing liabilities. That's an efficient business. We get to debt. This is pretty cool. We are seeing the debt fall. And typically big debts include like bank loans. When you're growing fast, the fastest way to get capital, if you're a proven business, is just go to a bank, tell them what you need, and they'll give you a loan. You just got to pay that off. And then equity here, nice increase there. So overall financials are looking outstanding. I think that's good on the mathematics side, so the margin of safety. Now let's jump into some of the fun parts here, the meaning, moat, and management. So I just have some notes here. I'll speak to you guys a little bit. So with the meaning, you guys may know, and this is on the news right now, semiconductors there's a shortage around the globe. And the reason is because of the of COVID-19, and a lot of manufacturing plants slowed down or shut down production. So now we're trying to catch up. We're trying to manufacture more semiconductors. And literally semiconductors in these chips, they're in, and there's a quote here I saw on a site, literally anything that has an on and off switch has some kind of semiconductor in it. And there are some things that don't, but for example, TVs, cell phones, refrigerators, microphones, they even talked about fighter jets. I mean, video games is a big one too. It's a necessity. And we'll get to competition here in a little bit, but semiconductors are big demand around the globe. So AMD is in the perfect position. I'll tell a quick story here that talks about the supply and demand of, like, this is a relatively boring product, but boring can be good. So back in the 1850s, we had the gold rush in the US, and everybody was rushing out west to make their fortune mining golds. But the people who actually got rich during that time period, in Austin, you probably heard this story in school, it's the people that created the tools that supported the trend. So people manufacturing shovels, pickaxes, Levi jeans came out in this era to be a stronger pant solution than khakis. Khakis would get ripped up and torn apart. Jeans, much more durable. So anyway, when you look at a business like AMD, and I hold other stocks like this in my portfolio, that they're not the trend. Like, I'm not a big trend investor, but I like investing in tools that support the trend. So in other words, no matter if a company manufactures a good hard product or a good video game system or a bad video game system or some kind of hardware, they still need the semiconductor regardless. And that's a great business to invest in. It's boring, but it's supporting whatever the trend is. So AMD fills that void. Let's talk about some of their customers real quick. So I kind of went through with the latest list I can find. Off the top, you're going to recognize these. You got Tesla, Google, Apple, Microsoft, Twitter, Dropbox, HP, Hetzner. Hetzner is a big hosting company. We actually use them at Tykr, but they're competitive to AWS and Azure. They're a much smaller company, but still a great product. And then Sony. And then I thought this was interesting too. I found a few universities that use AMD in their tech departments and solutions and really their infrastructure. We've got Notre Dame, Oregon State, University of Auckland, that's in New Zealand, and then you got Durham University based out the UK. So it's kind of cool on their site. They highlighted a few universities that really depend on AMD. So overall, will AMD be around in the next 10 years? My confidence, 100%. Like, this is a demand, knowing that it's in electronics. This is an important business. It's going to be around for a while. They've proven year over year, they know how to operate correctly. Their financials look amazing. So you can check that box on the meaning side. Now let's jump over to the competition, the moat. Now, just to take a step back, there are businesses that, they have a brand moat. Think like Coca-Cola is a solid brand moat. Apple's got a great brand moat. AMD is getting there. They're one of the top known brands, but how do they separate themselves from the competition? Looking at the competition we have, and I'm just going to open up 2 new tabs here. We're going to look at NVIDIA and Intel. All right, we'll up NVIDIA, and then we'll go to Intel. There we go. Okay, so looking at how these businesses are operating, NVIDIA is a big company. They do have, I believe, I did a little homework yesterday, and they do have, I think, Apple they work with. I think they also work with Microsoft. They also are well known for a lot of gaming systems. So they're still a really good company, but their score here, just looking at the financials, they're a 15, still pretty good. But the issue here is the margin of safety. So if we jump over here to their financials, net income is a little flat, and EPS is essentially net income divided by outstanding shares. It's just the simple math. So it's typically however you see your net income perform, you'll see your EPS pretty similar. So this is an issue here. Over the last few years, their EPS has been declining. Maybe it's AMD taking more market share. Maybe it's just operational inefficiencies on their end, but it just doesn't stand out as strong as a business fundamentally as AMD. Still, I like NVIDIA, always have. I remember seeing the logo in video games when I was a kid. So they've been around a while, but from an investment standpoint, so far, AMD is looking like the stronger business. They also, based on the clients I was able to find, they definitely have a bigger roster, it seems like, on the surface. Now let's jump over to Intel. And I just want to take a look at this graph here. They've been relatively flat for years. This is going back 5 years. We're going to be in this next week. We're going to open this up. So it's going to go as far back as we can. If we can get close to the IPO date, that's even better. But to see these points in time when the stock changes between on sale, launch, and overpriced. So I'm looking at the trend here. And, here's a perfect example. Hits on sale, takes off. Stock starts dropping off though. So what's going on here? We definitely have some issues in the probably related to that EPS. That's the key driver, but to drive the stock price up or down. In this case here, we hit overpriced and it starts falling off again. So let's take a look at the financials. Same thing. It's relative to the same chart. Is their net income, their revenue, flat across the board. That does not excite an investor. We like to see those numbers increasing consistently year over year. Free cash flow increased a little bit, 20 billion. That's pretty significant, bigger than the 700 plus or million over there at AMD. Assets are increasing, but liabilities increasing, debts are increasing. We saw the opposite over there at AMD. So numbers are okay. And then you look up here at the score, an 8, that's a little rough. If you fall below 10, you better have strong conviction of the business and know where it's going. Otherwise, it's highly advised you avoid it. Margin of safety, a little margin there to grow, but not a whole lot. There are a lot of semiconductor companies out there. Micron popped up onto the radar a few years ago. We could take a quick look at them. We got a 12 and a really big margin of safety. Let's take a look at the chart here. They've been flat for years. This was, they're a relatively small stock there. Oh, there you go. I see the warning here. So Austin, you may know this already, but typically when a stock drops below $10, it's entering penny stock territory, and a lot of large institutions, market movers, they don't even show interest in it. So it's just retail investors at this point playing with the stock, especially when it drops below $5 US. I know that can convert a little differently in other countries, but in the US, it's kind of a warning territory, less than 10, but definitely a no-go zone, less than 5. The chances of it breaking out past that number ever again, extremely rare, because institutions, they see that and that they move on. They look for stocks that have a lot more to their income statement, their cash flow statement and balance sheet. This is just too small of a company right now. Yeah, but years ago, I remember their predictions and whatnot all over Reddit that this is going to be the next big semiconductor company, and it hasn't really performed well. Although their numbers here look good, still that warning to be avoided. I do see here a good comment by Leo. Intel's pricing power being challenged by Apple and Google's announcement of making their own chips. True. Yep. It is really brand chip with better specs. Yeah, time to market is key here. What I think about is like, yes, you can manufacture your own, good on them, but you want to get to market faster with a product and start generating more revenue. AMD is really the go-to. So I look at the competition, and AMD is still, in my opinion, the best on the market. Of course, we'll see when some of these companies release their own. How do they stand up? What's their quality, speed, everything? I guess that's yet to be determined. So let's move on to the last step here, which is the management. And I thought this is a really impressive story. So Lisa Su, I'm just going to read off some of the details here, and actually I'll pull up her wiki. What I do is, I know wiki's not 100% accurate in all cases, but you can get some good information here. Her background is, she's got a bachelor's and master's from MIT. That's quite impressive. I don't put a lot of emphasis on college educations. You can be an educated person, but not have a lot of street smarts or business smarts. I'm sure you guys have all seen that. And then, of course, you can flip the equation and not have a college degree at all and be extremely successful in business. We've seen that over and over. But still, MIT, not exactly easy to get into, and she's got the 2 degrees there. This is what most impresses me about her background, is she worked at Texas Instruments, which is in the semiconductor space, IBM, and Freescale Semiconductor. I'm not too familiar with Freescale, but I think you guys are all familiar with Texas Instruments and IBM. So great experience there before jumping into AMD. Some things she's known for is she's really good at developing. She's a key driver around the efficiencies of semiconductors and really the improved silicon insulation as well. So efficiency and insulation of the actual chips. So that's where she really, they talk about here is where she really shined. I'm sure there's a lot more there. But then we get into the leadership quality here. So named one of the world's greatest leaders in 2017 by Fortune magazine, and then named one of the world's best CEOs in 2019 by Barron's. So there's surveys and input that feeds into that to give the rationale behind that type of award. But she has been well respected for years. I've known of her. I'd love to meet her, but here's a really interesting fact. There's this whole wage gap issue that's talked about. Men are paid more than women, and yes, that can be the case. But there are a lot of businesses that are flipping that equation. And I mean, you shouldn't be looking at your gender or your race. It's really, what do you provide to a company, and you should be paid for that. It's like, you're providing value, you're delivering results, that's how you should be paid. But anyway, 2019, she was actually the highest paid CEO out of all CEOs on the S&P 500. Her income that year, just a fun fact here, was over 58 million. So in this case, she's definitely a great leader for the business. On the surface, it sounds like, of course, you never know until you really meet somebody in person. But when you take a step back and you look at the margin of safety, the meaning, moat, and management, AMD, this is a great reason why, and we'll jump to my portfolio, and then we can jump into some Q&A. This is a reason why I hold AMD in my portfolio. So, and I will continue regardless if it's a short-term win or not. Like what Austin was talking about, this is a win for me in the long term. So, all right. So that's what I got on my end. I'd say we've got about 20 minutes here, a little more time than expected, to jump into a little Q&A. And since we have a smaller group, I've done this in the past with webinars. If you guys are interested, raise your hand, and I can add you to the actual call, and you can talk with us. Otherwise, if you want to keep chatting, that's fine too. It's up to you. Otherwise, I'll start picking on you guys. Abhinav, Juan, Leo. Abhinav, all right. Should be coming to the stage here.
Hello.
Hey, how's it going?
Hey, hi, both of you. So
welcome.
great sessions so far, as always. So my question was, I mean, in India, there is not much information available on the CEOs of the companies, right? So leaders of the company and basically who are the CEOs and top officials. There is not much information about them. So that was my question. Like, can we skip that part while doing the 4M analysis? And because I do have a couple of stocks that I found on the itself, and they are, I mean, ideal stocks.
Sure.
Just ping you the name so you can just
take a look.
Yeah, this is the.
Actually, I'll share my screen again, and we can actually look at it on Tykr.
Right. Because the numbers are like your dream numbers.
Right? 20 out of 20 and 80%. Yeah, looking good.
Yeah, just look at the financials as well.
Oh yeah, there you go. Nice
Right.
increase.
I mean, everything is basically as per expected. So can we skip that part, just one part? I mean, this is not the case with this stocks specifically. It's as most of the stocks that are trading in India. So
I want to see if we can look up. It sounds like
yeah, just go ahead and look their history.
So Bloomberg is a reliable site. What I usually do is I give you guys 3 sources where I look for CEO information. Obviously, I'll start with Wikipedia is great that you can usually find information there, especially on US based leaders. Then I'll jump to LinkedIn, see if they're on LinkedIn and they show their background there, which is great. And then of course you got to go to Google. So here I just started with Google and led to Bloomberg, which is good. It'd be nice. I like to see the history. Like, what do they do before? Career history.
Yeah, so we pretty much get like which company they have worked with. But apart from that, there is a bit lack of information.
Right. I just want to copy his name and just see if we can. Wiki. Yeah, let's see here. Just curious.
Yeah.
You probably did your homework there and he's not showing up.
Yeah.
LinkedIn. This might be a stretch too. We'll see.
Right.
And this is, I'm just looking here at the business. How do you pronounce this? Is it Gufic?
Yeah, it's Gufic.
Gufic Biosciences Limited.
Right.
And I'm just curious here. Manufacturing marketing of pharmaceuticals. Okay.
I believe the site is also not accessible. That's the case. I mean, most of the so nothing here as well.
Because of, and I've run into this before, because your population is really big in India, sometimes you'll type in a name and you're going to get more than one result.
Right. Yeah,
right. So finding the right, in this case, we can quickly see, yep, not the same person. I see your challenge there. I would say still try to get some information. A good sign is if they're not on social media. Typically what I tell people is CEOs need to be focusing on being a leader, and they need to be focused on building their business and innovating and keep their focus there. There are some CEOs that do spend time on social media, and it can kind of bite them. We've seen this with, I mean, a lot of people respect Elon, I do, but man, he said some stupid things that have caused that share price to just tank. So try to avoid moments like that and stay off social media.
All right. Thank you. That's
yeah, you bet. And then Leo, you had to also use Fibonacci sequence to create your resistance. Yeah. All right, get into some hard math here.
Yeah. So if you don't mind, I'll share my screen here real quick.
Yeah.
Yeah, here we go. Okay. Yeah, so I basically just got rid of the support and resistance line so that we could do it from a Fibonacci perspective. So I don't use Fibonacci much because I find that, which is funny, that it lines up with support and resistance values that you already put. So if you remember where our support and resistance lines were, like we had them here and here and here. Well, if we chart that out with a Fibonacci sequence, so again, we're going to go to our highest point here. And then we'll trace it back down to, let's say, our start of the trend where we mark that trend. You can see here that these actually line up very closely to where we set our support and resistance lines earlier. You can see here we have a support here, have support, resistance, support, resistance, support. So it lines up fairly nicely. So I would say that you can use the Fibonacci retracement if you're still learning how to draw support and resistance, because it will give you a really good helping hand. But how to know where to mark it is identify your trend first. That's where everything comes from. So identify your trend. And once you have that trend marked, then you can use that trend, use the high and the low to identify your Fibonacci level. Again, you can also do this on a smaller time frame. So the most recent trend up. So you can take it right there. And we can also see our, let me drag this over, see our support and resistance there. As you can see here, when I initially mentioned it, you can see that it lines up with this support level right here, which is where like, hey, I would have preferred it right here, which makes sense. You can see that's where the Fibonacci support comes in, and we're kind of hitting resistance here. But yeah, you can see your support and resistance levels more easy with Fibonacci, although I prefer just drawing them out myself. I hope that makes sense. Let me know if that doesn't make sense.
That was actually fascinating for me to learn.
Yeah.
Cool. All right. Anybody else besides Abhinav want to jump to the stage? Juan, anything from your end? You're good. Yeah, sounds good. Leo, Abhinav? Yeah, we're recording. Yeah, we'll get it on YouTube.
Yeah, just one question. How do you use that volume? Because I have seen that volumes, I guess that's indicator or something, whatever it's called, on pretty much every platform. Is it really useful, or is it just like a small replica of your actual price candles?
You're asking about the Fibonacci, right?
No, actually,
I think volume.
The volume.
Yeah.
Yeah. So volume is a whole thing of itself. And basically, to summarize it in the most simple way, is volume shows intention, is how I like to see it. So if you see a huge spike in volume, you typically see a trend change. So if you're going up higher and you see a huge spike of volume, typically you'll see a pullback soon, or especially when you're dropping down and you see a huge spike of volume, you'll see a trend change as well. And that just shows that people are looking at that stock a lot. And when people are looking at a stock, things tend to change. And how that plays out in the reverse is that if a stock is trending higher, like it's trending up, and the volume is really low compared to how much it usually is, then that shows that they're okay with the trend staying. And so the trend's going to continue to move higher. The stock will continue to move higher because no one is contesting it, and that's shown in the volume. So that's typically how I look at volume, is showing like, are people agreeing or disagreeing with this price?
All right, got it.
And then Leo did ask about RCI and MACD.
All right, I'll share my screen here. So I did jump over to here because I thought it'd be interesting. Anyways, we'll get into that in a second. But so RSI and MACD, RSI stands for Relative Strength Index. It can also be added on almost any platform through an indicator section. So you can either type in the whole name or type in RSI. It should pop up both ways. And for some reason, I'm auto-correcting to relax. So you have your relative strength index. I don't use this much, but it can be used. It basically shows from a technical perspective based on the price and volume when a stock is overpriced and when a stock is underpriced. And so your overpriced or overvalued will be above the 70 mark when it reaches this level. As you can see here, we kind of hit this high and came down. We hit this high and came down a bit. And then you also have that levels where it's a good buy, which is where it hits the lows here. So again, in RSI, I don't if you want to use it, I highly recommend you don't rely on it as your only source. Obviously, as Sean just broke down the 4 M's, we're not looking at just 1 M, we're looking at all 4 M's. So if you want to use RSI, that's great, but make sure you add it with other things as well. And I believe you also mentioned moving averages. Moving averages are one of my greatest things to use. I love them because like we can identify the trend by mapping out our lows. We can also do that by adding an indicator like a moving average. So if I add a moving average to a chart, which again can be done on most charts, the ones you want to look at, especially as an investor or a long-term person, is you want to make sure you set the length to ideally 200. So you want to start with 200, but you can also use 50. This will show the long-term trend. And now the 200 moving average is really good because it's something that everyone looks at. And when you're in the stock market, you want to do things that other people are watching, so you know that we're all seeing the same thing. And so a lot of people, a lot of big firms use this to just get an overall understanding of the trend. So for instance, if the stock is above this line, then they assume the stock is bullish. If the stock is below it, then it's bearish. It's just a general assumption. And so that's kind of how it works here as well. So you can see how most of this time we've been above it, which correlates to our uptrending stocks. It kind of confirms, yes, we are trending up. And so, yeah, so moving averages can be good to get a general feel of which direction the stock is heading if you're not good at kind of charting out those trend lines. I want to make sure, let's see, where's my chat? Yeah, this is getting into technical trading. Yeah, so that's what I do. So yeah, we're really getting hard into the charts. Anyways, I'm sure that Sean will come up with a feature of his own, but there's a way to like compare stocks, and I pulled up AMD and I compared it to like INTC, and like it says that AMD is the better stock, and I'll explain this here in a second. And then like Nvidia, if you type in Nvidia, it also says AMD is the better stock. So that's really cool. But basically, like it assesses it from a risk to reward perspective, from a volume perspective, from a moving average perspective, and then from a stock performance. And so again, you can kind of like read into it, but it's cool to see that AMD is typically the better stock compared to these. So that's cool.
What is that, your platform?
Yeah, this is my platform.
Nice. Okay.
Yeah.
All right. A few customers have they use Simply Wall Street, which is based out of Australia, and they'll
that's a great platform.
Use that compared to Tykr too, and sometimes the ratings will line up, they'll sync up. Yeah, and it's at the end of the day, you know, Tykr's not doing anything fancy. It's looking at the most important metrics to make sure they're increasing, and if they're not, I mean, then it tells you it's overpriced.
Stock investing is really, really simple. Actually, you just look for things that are increasing.
That's it. Like if it makes perfect sense, like if a business continues to, regardless of, you know, a recession or pullback, you know, you look at COVID as the last big one, regardless of the business is going through it, but they're still increasing their revenues and their net income, no matter what, like that's a resilient business. That's a business that knows what they're doing. And if they can do it the last 5 years, it doesn't guarantee they're going to do it the next 5 years, but there's a high probability they will do pretty well.
Yes. Yeah. It's the same example of like the dividend kings, how they've been increasing their dividend year over year for 50 years. It's like, wow, those are such old companies. They're so like boring or whatever. But if you look at them, they've survived so long, they've been growing and they continue to. So like, don't write them off.
Right. Yeah, exactly. Well, I've got a lot of fun questions that I'll bring up on the podcast about your results and you know, where you're taking your business, but I'll refrain from asking them here. This has been good.
Definitely.
Yeah, and good point there. Yeah, but business with good financials will be more resistant during uncertain times. Absolutely. Yeah. And I like, you know, you guys have seen the businesses in my portfolio. I like businesses that have multiple streams of revenue. Now AMD is a little more focused, but you know, you look at like Microsoft and Apple, they have their, like Microsoft, I'll pick on here. It's like they've got B2C SaaS. They've got their, you know, your Excel and Word and all that. That's great for business, but people as well. But then you got your B2B. You could call platform as a service, your Azure. That's where big money is made. And then they've got video games and Xbox and LinkedIn advertising. So they've got all these streams of revenue. And it's like, no matter where the market's going, people are still going to use these tools. So they're going to be highly resilient. And right now we've seen volatility in the market. So I've been buying more shares of the stocks in my portfolio. These little pullbacks happen. And over the last few days, it's been cool to see the stock start to increase again. So
especially today so far, the market like shot up overnight. So that should be interesting.
yes.
But yeah, I mean, another company that you were just talking about that reminds me, we all know this one, but it's Amazon. Like they do the exact same thing.
Yes.
Like they have a huge cloud platform, they have a huge shopping platform, and now they're reaching out into physical spaces and buying and like starting like their own physical Amazon stores. And so yeah, they're just like everywhere, where it's like built-in diversification. It's like they're creating their company as an ETF almost.
Pretty much. Really
cool.
Yeah. And I was actually listening to the Motley Fool podcast. I don't always follow the recommendations, but I find the analysts on the show really entertaining. Chris Hill he's a great host, and they're talking about, Amazon is going to be starting these or pretty much buying, vacant malls and going to be turning them into their own stores. Like, why not?
Why not?
I look at the win for the real estate owners, because that's been an issue. People that have, they're buying into REITs, and there's a lot of these industrial REITs that you've got vacant buildings, and you're not making any rent. Well, guess who comes in to save the day? Amazon.
So cool. What's your thoughts on REITs? I'm curious.
I don't invest in real estate. I think it's interesting, but what motivated me not to is years ago, Phil Town being my main mentor, he made a really profound comment. He said, I used to invest in real estate. It's nice for the ongoing cash flow, but as soon as you start getting enough money in your actual broker account and you're just doing straight up value investing, the amount of money you make in that significantly overcomes any kind of real estate investing. And I respect real estate, but I'm sticking to the stock market. My strategy here using Tykr has just paid off big. So REITs are cool, but
I agree. I mean, like I obviously stocks are all I know. I think the real estate game is great, but from like a stock perspective, like REITs don't do anything because of the dividend. Any increase just gets offset, and so I like to see a stock that's going to give me capital gains mainly with a dividend on top. Is great, but not a main dividend. Nothing happening here.
Right. Yeah. Another asset class to get into. And I on my podcast, I've interviewed a lot of people who are into real estate investing, and it's pretty cool to hear about their ways to create residual income and pretty much a way to avoid going into the corporate world.
I mean, I'm not saying that like when I buy my first house, like I definitely like would consider like a house hacking technique, like using like an FHA loan to get like a duplex or something. I would totally do, but like from like continually like buying more homes, I don't think I would do that.
Right. Yeah. All right. I think we've got about 2 minutes or so. Any last questions from you guys?
I'm not gonna lie, I'm kind of excited for our podcast because like we've had some like great like mini like combos here so far that I can't wait to see like what like 30, 40 minutes will do.
Juan is all good. Yeah. I see we had somebody new jump on the podcast or the webinar as we're going to finish up, but yeah, I'll speak to that. I think this went great, and I think it'll be good to, we'll get the podcast published. We have a really quick turnaround. So when we record, we'll probably turn around in like 2 or 3 days, and then see what kind of attention we get on YouTube. But I think, we could pick another stock and run through this again.
For sure. Definitely. I love that.
Cool. All right. I think we'll close out here. If you guys do have any questions, for Austin or I, you could probably just reach out to me and I could just forward the email off to Austin if you have any technical questions or trading or swing trading, I should say. But to really appreciate you guys jumping on here and really good questions as we went through. Appreciate the engagement.
Awesome.
Cool.
Well, thank you so much for having me on. I enjoyed you guys. It's fun.
All right. We'll talk to you soon, Austin.
See you.
See you guys.